Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne with David Ingles. Our top stories this morning. President Trump is said to be willing to impose new tariffs on India and China to push Russia into negotiations with Ukraine. The White House issues a rare rebuke to Israel after an attack on Hamas officials in Qatar. European leaders also denounce what they call a setback to peace efforts. And Hong Kong stocks in focus as mainland investors snap up the shares for an 8th straight day, and investors also awaiting China's inflation figures due this hour.
And I'm Annabelle Drewlers here at Semicon Taiwan, one of the largest semiconductor events in the world, where I'll be speaking with crucial players in the chip ecosystem on the biggest issues their businesses face and how they're shaping their outlook.
Good morning. Welcome to the program. Midweek session is just under 29 minutes away. I'll give you a big number at the top of the show here. 1.85, 185, not CM, not my height. That's the distance in percentage points from record highs here on the MSCI Asia Pacific. The benchmark right now, 216. The level you're tracking is 220. And as you can see, we're getting even closer to that with a rally across the tech space. Taiwan coming online. Monthly record as far as exports go. Point number one. Point number two is, of course, we have a lot of fixed income events to watch today as it pertains to an auction in Japan, 5-year there, 5 and 50-year in China, which we can get to more in a moment, right? Dollar is actually seeing a bit of a bounce right now. You had this massive revisions, record revisions, of course, to the jobs numbers, 900,000 jobs. We're back above the 1,200 level on the dollar index. Of course, the other big event that we just talked about, too, was what took place in Doha. Markets reacted initially and then quickly brushed off when you look at where Brent eventually settled and VIX futures. We'll talk more about that in a moment. Gold is coming off a little bit, 0.5% following a record run of late. China overnight, the outperformance has been really quite interesting and visible, really. Golden Dragon Index up a further 1.5%. We're looking at some of the premiums involved here going into the session today. So two names come to mind, JD.com and Kingsoft Cloud. Alibaba continues to push highs, 4%. Morningstar will be coming on in a couple of minutes here to talk us through. They're bullish now on Alibaba. They're talking about how the market is underpricing the long-term benefits of the cloud business on the AI story in China. A50 futures pushing down. We talked about this bond auction coming through, 8th day as well of southbound flows coming into Hong Kong. Yeah,
it continues to be strong, and I think Alibaba is sort of the reason behind it, right? Yeah. You take a look at the buying in Tencent and Alibaba last few sessions. Those two stocks alone have been really gaining a lot of momentum and really helping with this equity rally of late. So certainly that's one thing to watch here in your agenda today. Take a look at the inflation numbers that are coming down in a few minutes' time. So we talked about maybe factory gate prices might start narrowing their decline, right? Goldman Sachs' Hui Shan told us yesterday, look for the month-on-month numbers and maybe the signs that anti-involution is really coming into fore now. You take a look at southbound flows, as Dave mentioned there, sectors including tech, hardware, lithium. We talk about CATL with the mine there now resuming production soon, as what we've been hearing from our sources there. So that certainly did move the market overnight in terms of lithium stocks and the like. The CGB sale, we're still waiting for credit data out of China, and the Belt and Road Summit in Hong Kong.
Yeah, we understand, in fact, that John Lee is speaking, I believe, at the opening session. That will get you more lines, of course, once we do have more on that as well. Okay, you know what? Just happened a few minutes ago. So the Kospi actually is now trading above its record high close. Yeah. Whether or not it closes above that is another thing altogether. We're looking at breaking news, too. Okay, this is on Japanese nuclear power group Kansai Electric. You have Elliott now taking a stake. We're up close to 8% at one point. What are we doing now in the stock? Can we show that, please, if we can, so our viewers can have a sense of what the market reaction is? I'm looking at it myself. 9503 is the ticker for that as well. Yeah, Elliott taking a stake. That's what we know so far, and the stock should be coming up, if not already. Do you have it up? Let me just have it up as well. Okay.
Sorry.
I need more screens. Where's my other screen? 8% now, 8.25. Thank you so much. 8.25%, 2,300 right now on the share price. More details on this coming through. All right, back to the top stories right now. This rally in China, we'll continue to track that going into today. A lot of momentum coming through in tech. This is again, and this was really somewhat out of the blue. Donald Trump is talking about tariffs on China and India.
Yeah, and this is a way to, he uses tariffs in a way to get his way in other sort of bigger matters, right? When it comes to
negotiating
tactics when it comes to Ukraine and getting Russia to maybe come to some sort of peace deal. That certainly is kind of why we're seeing tariffs kind of reemerge in the headlines once again. But certainly there's a lot of focus there. I don't know if markets care too much at this point about tariffs right now. I think we're really kind of focused on still that whole AI trade here in Asia.
Yeah, it really is. And I think the Taiwan data point, which typically is not something that markets tend to spend too much time on.
Right? Yeah.
The exports, monthly exports, is indicative really of just this AI trade, and that is being supported by underlying demand for the things that you need for the AI trade. The other thing that, to the point that Yvonne was just making here on big stories that markets don't seem to be placing too much weight on currently, is what took place, of course, in Qatar, in Doha, overnight. You had several blasts heard there, of course. You had the Israelis coming out and talking about and giving context to what happened there. Initially, when you look at what happened overnight, right, whether that's oil or the VIX, initial spike, and then quickly that dissipated into the close as we pivoted back to the other big story, which was AI and this rally taking place.
Yeah, and I guess the oil markets are not really focused too much on that geopolitics side of things, but maybe still on supply and demand after what we heard from OPEC too.
Yeah.
Just the last few days as well. Let's get to one of our top stories here right now, which is President Trump said to be willing to impose sweeping new tariffs on both India and China in order to push Russia into peace talks with Ukraine. But that's only if the EU does so as well. For more, let's bring in our chief North Asia correspondent, Stephen Ingles. He's here with us. So what do we know about this new proposal from the White House?
Well, we do know that Donald Trump phoned into talks between the EU and U.S. officials as the EU ponders further sanctions on Russia, in particular their oil sector. There's a number of different proposals out there being bandied about, whether further sanctions, further restrictions on the shadow oil tankers of Russia, maybe more sanctions on Russia's financial sector and banks and other measures. But one thing that Donald Trump phoned in and suggested is we can, meaning the United States, can add further tariffs onto China and India as a pressure point to pressure Putin and Russia to come to the peace table and have negotiations with Zelensky and Ukraine, which Putin so far has not really given any indication that he is ready to come face to face with Zelensky. In fact, they've actually upped their attacks in Ukraine. But only, Donald Trump put this caveat, but only if the EU member nations also do the same thing on Russia and China. Keep in mind, China is the biggest buyer of Russian energy. India has been upping their imports of Russian crude, much to the chagrin of Washington. So, again, it's not a sure thing that all the EU member nations are going to be on board with further sanctions on Russian energy, because countries like Hungary, among others, have blocked strict sanctions on Russia.
Something related but confusing to me, Steve. I wonder if you could clarify this. Aren't we also learning about progress from Donald Trump about conversations on trade with India, because that seems to contradict what everything else is indicating. But I mean, this is the world we live in.
Yeah, that's the first thing I thought when I woke up this morning. I said, wait a minute, didn't I read something that he had posted on the same day, Tuesday, in the United States, on Truth Social, that he is making progress with the Indians about resolving their differences over trade barriers. So on the out of one side of the breath, you're saying we're making progress. On the other side of the breath, you're saying we could add more tariffs on you as a way to pressure Russia. Not necessarily to pressure them, but indirectly it would pressure them. Keep in mind, the United States has imposed 50% tariffs on Indian goods to the United States. 25% as reciprocal, 25% as punishment, if you will, for India buying Russian oil.
Steve. Thank you so much. Stephen Engel there, our chief North Asia correspondent. Markets are rallying right now going into the open today. Certainly the last week or so has really seen some upside momentum coming through across these Chinese markets. The S&P, of course, closing, I believe, at a record high overnight. Mark Cranfield is with us right now out of Singapore to talk us through the trading day, the trading action today. Mark, what's top of mind for you, sir, this Wednesday?
We love the idea of Federal Reserve interest rate cuts, especially big ones, and you can see that spreading across the world. Another record, as you've been talking about, S&P 500, and you're seeing the positivity just spill over into everything. Kospi today going above its high. Maybe it will stay that way for the close today. I mean, everybody just wants to take more risk. Investors feel confident that interest rates are coming down in the United States. And when you see those huge revisions to the jobless numbers that we saw overnight from America, the justification for the Federal Reserve to keep going in that direction is pretty good. And I mean, Korea itself probably has another rate cut coming in October as well. So most of the world is looking towards opportunities to lower interest rates, apart from Japan. They still think they can raise rates. But elsewhere, it's good for equity markets. You're seeing high demand for chip stocks as well. AI theme is still running hot. There's really very little reason for investors not to continue throwing money at equity markets. And that's what you're seeing play out. And it helps, of course, that the dollar is relatively soft as well. That fuels more demand for Asian markets in particular.
There's a lot of talk, Mark, about this inflation print out of the U.S. this week. I mean, do you think anything out of there could actually derail this sort of risk rally that we're seeing now?
You would certainly see a knee-jerk reaction if we get a hotter than expected CPI number. It is not going to change the Fed's thinking at all for the September meeting. The 25 basis points is cast in stone. Dialing back on that is unthinkable in the current climate. The only question is whether or not they're obviously going to discuss 50 basis points. Whether they go through with a bigger rate cut is a question, but not doing 25 basis points would just be too devastating for financial markets at the moment. So whatever comes out of the CPI, even if it's a very hot number, you may see an initial reaction in markets where they get a bit defensive. It will probably be wiped out relatively quickly because you can slice and dice CPI so many ways. You can look at averages, you can look at all kinds of regressions. They will find a way to talk down those CPI numbers if they do happen to come out hot. So that's not going to change anything for September. The only place it may do is in the outlook after September. So possibly you would see in the messaging from the Federal Reserve, they get a little bit more cautious for what comes for the rest of the year. But in the short term, it doesn't mean very much.
Mark, just to borrow your phrasing there, hot, can I ask you about Chinese tech and what's going on there? I mean, 8th day of inflows across the stock connect. This premium has AH has shrunk to 6-year lows. We're at 120 on the gauge there. Massive move in the ETFs overnight. What's going on there?
Yeah, I think your last point there is just look at Alibaba ETF. I mean, it is just going off the charts. Every day people come in, they see it gaps higher again, trades even further up in American trading. I mean, that's the best start you can possibly have when you come in the morning in Asia and you've seen that Alibaba has zoomed higher again overnight on big trading volumes. It's just reinforcing your view that there is more to go in this story. And it's an incredible turnaround because people have written off Alibaba a few times over the past couple of years, but they're really coming back. Their latest AI products seem to have really captured the imagination of everybody. And when you see their comparisons in the United States and around the world, people will think there's still potential more upside for them and for other companies employing similar devices. So this rally may look as though it's gone quite a way, but if you compare it to the kind of things that we've seen this year with Nvidia and some other companies, you may suggest that there's quite a bit more to go here.
Mark, thank you, Mark Cranfield there, joining us from Singapore, MLI strategist on what to expect next. And yeah, we're going to talk a lot more about tech here coming out. We're live from Semicon, Taiwan. The president of TSMC supply chain member CSUN joins us next with his outlook for the chips industry. And happening now, we got some live pictures out of Hong Kong here. John Lee, the chief executive, speaking at the Belt and Road Summit here in the city as we count down to the opens of trade in Shanghai, Shenzhen, and Hong Kong. This is The China Show. Good morning.
Right, you're watching The China Show. Welcome back. Semicon, Taiwan. Sounds like the Transformers to some extent here. Anyway, begins today. You have, of course, top names in the semiconductor industry. That's the context. They're discussing, of course, key issues, AI chips, the shifting supply chain that's really benefiting many a name in Taiwan. Let's cross it over, in fact, to the event. And Belle is there, our Asia Tech correspondent, with our first guest. Belle.
Thanks, David. Yeah, really great guest with me this morning. This is the CSUN president, Frank Liang, this morning. But CSUN, of course, is one of the major suppliers to TSMC for its advanced packaging technology. That's CoWoS, chip on wafer on substrate. But let's just get started, because I mean, we're not really in the era anymore of Moore's Law. And so that really puts that greater focus on advanced packaging. What's the scale of the opportunity that you see?
Okay, actually, before 2023, we don't think it's an industry, it's a business, but starting from 2023, it's become like a new volcano. Yeah, like before 2023, we shipped only one machine per year, but in the past 3 years, we almost grow like annually 100%. So in the next few years, as we heard from the TSMC announcement, that the advanced packaging become the most important role in terms of beyond Moore's Law. So actually, for all the chips that needed by like NVIDIA, like all other ASIC chip, like Broadcom, they all need advanced package because of the stacking all the chip to make the high performing computing available. So actually, the growth will be very huge. I think for this year, they at least they have 70,000 pieces of wafer per month. But later it will be more.
So how do you keep pace with that demand? I mean, you were saying that for 30 years you were selling one piece of equipment to TSMC each year. Then came 2023, and it was this really big focus on advanced packaging, and
yes,
demand exploded. As a business, how have you kept up?
Actually, the bottleneck for us is not about it's not about production, because 10, 20 years ago, when LCD industry come to Taiwan, actually we experienced that kind of expansion before. So we already built an ecosystem to fit these kind of fluctuations. So actually, we have formed an alliance, so we share our capacity. So for example, one of our alliance company actually grows like in terms of revenue growth around 200%. But actually, we share our facility, we share our engineers. So actually, we could deliver at a much faster pace.
TSMC is bringing a lot more fabs online in the US in particular,
yes,
and of course there's sort of that overarching tariff risk as well that the companies face. Would you be prepared to follow them there as well?
Yeah, we have to go with them, but the key issue is what kind of product they will produce there. So we will choose a more adequate team to go there to service them.
And when it comes to team, I mean, one of the key concerns for companies that are moving to the US in particular is also around talent and labor supply, and having the right people there on the ground that can do what you need. But then this week as well, I mean, the past few days, we've heard concerns about this raid on the Hyundai LG battery plant in Georgia. Is that a concern for you about being able to find the right staff or to bring staff from Taiwan?
I think that's absolutely a very crucial point. We have to face that. And I think the first thing is that we have to prepare the team to serve them. The second, we have to prepare a training team. And the other thing, the more challenging is to recruit locally, because it's a very different culture there. So it's very challenging for us to recruit talent to service TSMC locally.
So how do you go about that? I mean, what's sort of the process look like? What's the key steps, and how long does it take as well for you to be ready to make that step to the US?
Actually, I think in the beginning, when they accept their first line, I think we'll be ready to help them to start. But later, because for TSMC, the most important is to co-develop with them in the production line. So in the beginning, we will send our staff there, but later we'll have to collaborate with local university to start with fresh. So this is the best way to do that, like University of Arizona, something like that. Yeah.
Okay. So bringing students down the pipeline, and
yes,
yeah, okay, that makes sense. What about Europe as well? I mean, TSMC setting up plants there or continuing to build out their expansion in Europe. How does that also fare in terms of the availability of labor? Is it more accessible, or you face the same challenges?
I think it's totally different approach when TSMC set up their factory in U.S. from in Dresden or in Kumamoto, because in Kumamoto or Dresden they are more mature facility. So we are not sure whether they will have advanced packaging there. Yeah. But if they will have, we will go there. And now we like in the beginning of this year, I went to Prague and to see how we can get talent there. So I think in the East Europe, there's a lot of good talent there, but they need training.
Yeah, we've really seen that big push from the Czech Republic in particular. Last question about revenue. I mean, last year on the 2024 report, we saw semiconductor revenue making up around 35% of the overall pie. What's it looking like for 2025? I
think it will be over 50%. I think it will be more in the next few years.
All right, Frank, thanks very much for joining us this morning. That was Frank Liang there, the CSUN president, joining me as we get Semicon Taiwan underway for another year. And as we've been saying, 100,000 people expected to come through these doors for the event.
Amazing. All right. Thanks so much, Belle. We'll have much more coming out from Semicon Taiwan coming up. We'll be hearing from PTI's chairman, plus Infineon CEO will be with us to share his outlook on the global chips supply chain. In terms of the pre-market, this is what we're setting up to as well. We're just minutes away, of course, from that inflation number out of China as well. And you are continuing to see gains in this equity market in Hong Kong. We're up 100 points already. Futures are flat this morning. But yes, we did get that renminbi fix once again at a 710 handle from the PBOC. Plenty more ahead. This is Bloomberg.
Good morning. A rally is upon us and looks to be extending today. So the Hang Seng Index is, in fact, poised to open above 26,000. Today, 0.4%. We'll talk about tech and some of the superlatives there in a moment. But yeah, this is really a tech-driven equity market rally, and certainly the flows are indicating that tech continues to be favored by mainland investors.
Yeah, look at Alibaba. We're up for a fourth straight session, and this brings us what? I think it's close to 10% gains already this week, which is amazing.
That's good.
For that stock. We talk about how we have approached around those 4-year highs for Alibaba. And take a look at, it's really not about a food delivery story anymore. This is clearly on cloud. Cloud. We saw the Oracle and what they said in terms of cloud outlook overnight as well. That certainly helped a lot of these sort of AI trades as well. And really, when you take a look at Alibaba versus Meituan, it's a tale of two companies almost at this point. Take a look at how the stock direction has. So really, Alibaba has changed the narrative substantially in just a matter of a week or so.
Yeah, it's now become a proper AI play.
Yes.
When you look at that, and certainly how the price has been reacting to the recent news. The other thing we want to point out similarly to this is, of course, and as you can see, Meituan has now taken out $100. Baidu is seeing a little bit of weakness today, so that's diverging. We're looking at JD.com, that's another thing, and Tencent continues to gain 0.5%. And I think just over $700 is the all-time high for Tencent. So we're still about $70 away from that, but we've been getting there very close. And of course, lithium is a big story today, too.
Yep, we're seeing a massive drop in some of these lithium stocks here in the back of our reporting that CATL might be ready to restart that mine in China. The Open is next. This is Bloomberg.
If you look at the steel prices, coal prices, lithium prices, poly, silicon prices, which goes into solar panel, the raw material prices did increase in July and August. So from that point of view, when you have upstream sectors price going up, whether on expectation or actually anti-involution related, if you already see commodity prices going up, that could translate into improving PPI sequential inflation. But for the year-on-year numbers that pop up on your screen, that's going to take a while to get back to the positive territory.
Yeah, that was Wei Shan there. She joined us yesterday here and shows, counting us down, of course, to the inflation report. And the month-on-month number might look better than the year-on-year, which is perhaps not as flattering.
That countdown clock made me nervous.
Yeah.
We're counting down in milliseconds.
Feels
now.
like me blinking after 5 coffees.
Yeah, so we're expecting at least a little bit narrowing of the contraction, at least for PPI, right? But as Hui Shan mentioned yesterday, look for the month-on-month numbers. If that swings to some sort of positive territory, you're starting to see signs that maybe anti-involution is working, right? She mentioned a little bit more about the midstream sort of segments of this economy. Certainly that's one thing to watch. But can this actually spread further is something that we're going to be asking Xiaojia from Credit Agricole coming up as well. There you go. Inflation numbers just crossing your screen here right now. Seems to be in line in terms of PPI numbers, 2.9%, which is aligned with consensus there. And yes, confirming the narrowing of that contraction as well. CPI, though, still negative. We're talking about 0.4% to the downside there. That is a slight miss on on that front. Anything that's standing out to you, Dave?
Yeah, okay, so I'm actually looking at the month-on-month figure. So if it is coming in line, that should actually be enough. And the reason I'm hedging at the moment is because we're still yet to actually see the actual number for August. But the fact that the year-on-year is coming in line indicates to me that the month-on-month should actually be either flat, if not slightly higher compared to the previous month. But yes, we can have a look at these markets, and of course some of the other CATL, of course, is a stock
that's the big
very
one
much
to
in
watch,
focus.
right? Our reporting saying that they could be restarting that mine earlier than expected. Before it was about 3 months, so it looks like things have been pushed forward a little bit here as well. So lithium stocks, we're seeing CATL was actually lower in the A-share market as well. We're watching, of course, Alibaba. That's the standout still, 145 now for that stock. We have Morningstar's Chelsey Tam joining us in just a few minutes. She just upgraded just overnight, 175, I believe.
Is the target
price.
Is
her price target now. Really on the back of this kind of cloud revenue from AI that she thinks the market is still underpricing here at the moment. We're talking about a fourth straight day of gains for Alibaba, and that is lifting overall HS Tech. We're up 0.8%. Tencent, Baidu is doing quite well. Meituan, though, is heading the opposite direction here today, Dave.
Yeah. So I think what's key there is people are buying the Baba story because that's an AI play, and that's not so much. They're now looking at Baba, at least for now, and we don't know how that changes, right? They're still looking at Baba. They're no longer viewing Baba as a play on the sort of the low margin delivery business, right? And I think the key thing there is, we were talking about it before the shows, but when you get groceries
Quick commerce
delivery. If
well,
they're
you can get your groceries in under an hour, basically, right?
Yeah.
And it's something that they're really kind of pushing into with the likes of Meituan and JD. Is that really going to be something that they should be getting into, or is this going to be a very costly sort of endeavor?
Yeah, that's a new trade, a new price war that they're about to get into. But again, the cloud business, and I think Tencent also has a cloud business that's higher margin, that's an AI play, and we'll see whether or not that actually is the multiple you should be attaching to the likes of Alibaba and not so much Meituan. Anyway, I think that's something we can revisit later with Chelsey Tam.
Yeah, let's bring in Xiaojia first, Chief China Economist at Credit Agricole. So 2.9% to the downside for PPI, 0.4% to the downside in CPI. Your initial take on these numbers so far?
I think CPI inflation, like Joe more than expected, I think it's a little bit disappointing. I think for food prices, they probably have dropped more than expected. I think there are some temporary factors that could be weighing on the CPI more than expected. For example, weather has not been so great, hot weathers, and also more typhoon and heavy rains in many parts of China. That may have weighed on the consumption for the Chinese household. But that said, I think this is definitely a very weak number, and China policymakers have to do more. Yeah.
What about on the PPI front?
The PPI, I think, is encouraging. I think this is really the first time the PPI deflation narrowed. I think by 0.6 percentage point, the first time since February. I think in terms of the month-on-month terms, I think it's perhaps still...
It's still slightly negative, actually.
Slightly negative, but I think narrowed compared to previous months.
Yeah.
I think there is, I think this is showing some initial positive impact from the latest anti-evolution initiatives from the government.
Yeah, are we starting to see that really get some more traction? I mean, what are you tracking in terms of commodity prices and whether this rebound is sustainable?
Yeah, I think that if we look at the reactions of the prices, it was more notable in July when this policy rhetoric from top policymakers really got intensified. But in August, I think selectively some commodity prices continue to maintain this gain, but for some other commodities, they have seen some pare back in terms of the previous gain. So I think people are still testing what could be real, what could be really out of expectation gain. Yeah. So we are still going to see more of the market regulators, industry associations to follow up with more policy details to address this. For example, yesterday we already seen these market regulator asking the food delivery platforms and asking them to really to bring in this extra low price competition, etc.
the National Bureau of Statistics is just giving more context to this drop in CPI. So they're partly blaming the high base effects coming out of last year, and which is why we're looking at a drop. But notwithstanding sort of the lack of underlying demand, of course, in the economy, the reason I ask you that is the equity market has been rallying despite that, and that's perhaps because of lower interest rates. Do you expect the yield curve to remain not as steep as what we've seen elsewhere, which has become problematic for other places?
I think so far, if you look at the China's bond yield curve, it has been relatively more stable, lack of volatility that we have seen in other developed markets in the last couple of weeks. I think on one hand, I think people really have the understanding that the economic fundamentals for China has remained quite weak. Today's inflation data tell us that the reinflation will probably take a little bit more time, so that even though the long end of the curve seems to be really recently see more volatility, but the upside I think is still relatively capped because of the lack of real pickup in the fundamentals. Most recently, I think the stock market has been the sentiment has been holding up quite okay. There has been some of the allocations from the bond market to equity, but not really out of scale yet.
You mentioned a little bit about the need for stimulus. There's a lot of talk of, the fact that this equity rally is liquidity driven, that it's refraining the PBOC to really kind of undergo any sort of rate cuts or triple R cuts because the fear of fueling equity speculation. Do you sort of buy that sort of narrative right now, or do you still expect to see some decent amount of stimulus by year end?
I think we are still expecting PBOC could cut a little bit more. I think our baseline is 10 bips in the fourth quarter and another 10 bips in 2026. It's not massive, but if you look at how Fed could be cutting rates and more front-loaded, and the recent, the relief of the pressures on the PBOC's mandate to maintain FX stability, I think definitely that opens door for more PBOC easing. But of course, I think timing-wise, the PBOC need to be a little bit more careful. I think the continued recovery in the stock market is healthy and will be supportive because it will help to ease the financial conditions for the corporates as well as for the real economy. But in terms of the pace, I think PBOC will definitely want a more healthy increase of the stock market rather than really some crazy rally and sharp correction.
It's something we've heard quite common on the shows recently is the stock market's become somewhat of an economic tool as well. So we've had inflation. Trade was out, I think, 2 days ago. Yeah. What do you mean of trade? What's the exports outlook right now?
I think for exports definitely will show more signs of slowdown, and more notably into Q4 because of this higher U.S. tariffs, the payback of previous front loading, and in Q4 last year the comparison base was quite high as well. So we think export will likely to decline in fourth quarter compared to now still quite decent growth. That said, I think China's products remains very competitive. If you look at the deflations in PPI and if you look at the CNY, is really being quite stable. So in terms of trade-weighted terms for the CNY, actually recently has only rebounded quite modestly. So I think that would, and also on top of that, there has been continued diversifications of China's exports. I think that would provide some buffer.
Okay, nice to see you. Xiaojia, there are fantastic insights as always. Thank you for coming in here. Chief China Economist at Credit Agricole. Okay. Everything seems to be moving to the upside. So while we're looking at producer prices continuing to have a negative print there, the Alibaba story is, wow.
The bulls are in control, right?
Yes.
We're talking about soaring to a 4-year high. We're up close to 3% right now. So this brings us back to November 2021. We talked about this yesterday, right? That brings us back to sort of the glory days of Alibaba, right?
Yeah.
government crackdown,
regulatory
fines, and the like. What a comeback, really.
There's a really funny statistic, has nothing to do with the market. So, but here's something interesting, and bear me out here. So, can we show Hang Seng Tech Index? And here it comes, right? You remember Brian McKnight's song?
Back at one?
Yes, it's been 6 months.
Yeah.
8 days.
Yeah.
And 12 hours.
Yeah.
Since you went away, right?
Yeah.
6 months, 8 days, 12 hours.
Yeah. Yeah, we're singing on the show now.
It's been exactly that amount of time since the Hang Seng Tech Index hit an intraday high on March 7, 2025. It's been 6 months, 8 days, and 12 hours since an intraday high in the Hang Seng Tech. Look how Brian McKnight suddenly finds himself.
What's this whole, isn't there a thing they call it numerology, where the Swifties love this, right? When they talk about numbers and what it all means and stuff.
Yeah.
But yeah.
Well, so you have to find
we
meaning.
We work at Bloomberg, so yeah, numerology is in our DNA in some ways. But yeah, here we go. Alibaba, anything cloud related, I think, is doing quite well here today. Take a look at like Kingsoft, for example. These are some of the big names that we're tracking here in the China session as well. CATL, that still remains a kind of big sort of story there. So our sources telling us that they are ready to maybe restart this mine that really sent shockwaves to the market just a few months ago as well. So CATL A and H shares are up, but some of these lithium stocks are collapsing here this morning. Government lithium down some 6%. Apple suppliers, right? So we have thinner phones, we have new AirPods. What else do we hear, right? A whole lineup that's, you know, they lined up here when it comes to the iPhone. So certainly there's a much thinner AirPod Air that they're talking about.
Well, I hope that doesn't mean thinner devices means that skinny jeans are coming back, because that needs to be
outlawed forever.
Yeah, that needs to
out of my millennial memory
Yeah.
now. But there you go, mixed picture for some of these Apple suppliers here today. But yeah, could be a sell the news sort of thing now that we have seen those products unveiled. Coming up, we're still talking about Alibaba. We were speaking with Morningstar's Chelsey following its recent upgrade of Alibaba stock on the back of its cloud computing and AI investments. Chelsey Tam joins us next. This is Bloomberg. All right, we're checking Baba stock here. There you go. It's another solid day. We're at 146 levels for the stock here as well. I believe the last 3 sessions alone, we've gained about close to 10% already on the stock. So we're getting some lines here crossing. So yesterday there was some reports that they might have an update on their business when it came to AMAP. Of course, this is their digital map provider. So they're committing 1 billion renminbi in new subsidies for the AMAP business. And they're upgrading the AMAP now with features like, get this, AI ranked site reviews. So yeah, things are fired up once again, once you hear AI.
Yeah, and they're bringing this into, I wouldn't say a traditional business, but certainly an upgrade to one of its, some of the older initiatives, relatively speaking, of course. So we'll really see. This is really, I think, a company that's now starting to show us how they're using the technology into being able to bolster that. And certainly the market's re-rating the stock. Morningstar, in fact, on that note, has upgraded its rating on Alibaba. They now have a price target 175 Hong Kong dollars. Chelsey Tam is with us, senior equity analyst at Morningstar, joins us right now. Chelsey, the thesis, if you could elaborate on this, is the market up until recently has just been underpricing the potential for Alibaba. In what sense?
Yeah, so I think it's mainly the cloud business that investors are very looking forward to. So they have increased the revenue acceleration pace in the June quarter for the cloud business. So I think it got the investors very excited because that really speaks to strong demand. And we already forecast that there will be acceleration in AI revenue and cloud revenue this year and next year, but then it also beat our expectation. So I think that's number one. Number two is that I think maybe slightly less people talked about this, but then if you look at quick commerce, they actually give very good guidance, like very clear guidance. Analysts love guidance. So they were saying that GMV, there could be 1 trillion additional GMV, like in 3 years. in 3 years' time. So on our estimate, it could add, like, for example, 9% or low teens to adjusted EBITDA. And in addition to that, I think the traditional e-commerce business, which is the customer management revenue, also did very strongly in the June quarter. And then, like, I think I didn't expect that the quick commerce can already give a lift to CMR. So I think that is also beating expectation as well.
Okay, I want to get the food delivery side of things a little bit later on, Chelsey, but this new AI product that they've been talking about, how are you looking at it right now? How does it compare with the rivals out there like OpenAI or DeepSeek, for example?
Yeah, I think that we cannot really completely compare them with OpenAI. But if you look at some of the 3P, third-party consulting firms or data providers, they would rank like OpenAI, Anthropic, like a few of these top leaders in the US, like higher. But then if you look at China, it's mainly DeepSeek and Q1 that are ranked like very highly in terms of like overall intelligence. And then I think the key is that we understand that because of national security reasons, there's no way that OpenAI can come into China, massively expand their businesses. So what is left in China to capture the pie is like companies like Alibaba or Baidu. So I think that they will absolutely benefit. And you can also see that, like, if you look at how fast Alibaba is able to improve and how aggressive they are, you can actually see that they really have the capability to improve very quickly.
Chelsey, just to play devil's advocate, and I'm sure you might have a response. I'm sure you have a response to this. How would you respond to, well, two things? One is the sequential drop in the cloud margin, and number two is the fairly subdued capex on AI. Like, what doesn't that tell you that they're more conservative as it pertains to the outlook for cloud? What's the bullish spin there?
Yeah, so I think generally speaking, I'm not worried about the cloud margin. So for one thing, I think that the cloud margin would have like slight fluctuation, but then they would be able to stay at high single digit. So as long as it's in high single digit, I think I'm okay. If you think about it, if you have like so much new capex coming into like this division, you will naturally see a lower margin because at the beginning you cannot ramp everything very quickly. As in, like the utilization is not 100%. Like once you invest in those capex, but then like later on, I think the demand will catch up very quickly. So then we actually expect that in the next 2-3 years, margin will be high single digit, and then later on they will just continue to grow. And also, I think there will be an inflection point where, I think that training, I think that inference demand will probably outgrow training. So then we actually need less resources for inferences. So that could actually give some boost to margins. But let's think about it in the long term. Margin will improve.
Chelsey,
and then, sorry,
and then your take on food,
Sorry,
and then food delivery because. We're running out of time, sorry, but there's so much. The narrative has shifted so much when it comes to this stock, right? I think just a few months ago we were talking about food price wars and food delivery price wars, and how does this all end? You mentioned about quick commerce, which Alibaba is really kind of digging their heels into here right now. How do we gauge whether this is a strategic move or sort of a costly endeavor that's really going to weigh on profitability?
Absolutely strategic, and I think they have executed this food delivery strategy better than ever. Like, it's pulling all the resources that they have within the ecosystem, combining Flicky, Ele.me. They put it into the traditional e-commerce business. They have membership program across all of these different segments, and then they basically use quick commerce to improve the active users in Taobao, and then it could create cross-selling, improve advertising, and then they also can save a little bit of money in terms of advertising on that sense. So if you look at sales and marketing expenses, last year it was like 144 billion, and we're talking about like they're using 50 billion in for food delivery subsidies. So so they actually, I think they will be able to substitute some of this advertising expenses. I think they're doing a great job.
Chelsey, thank you so much. Chelsey Tam there, senior equity analyst at Morningstar, laying out the bull case there for Alibaba among really the many that we've seen so far already here on the street. Plenty more ahead. Okay, tech's up. Baba, bottom of your screens. The Oracle story overnight really doing enough to lift the overall theme across the region. I'm not going to get into the specific names, but yes, this is really fueling this AI bull trend that's taking place. More on that, plus more coming through. We're out live, of course, out of Semicon Taiwan as well on the same story coming through.
We start with some breaking news in the second hour of the China show. This is according to a judge in the U.S. and they have ruled that President Trump cannot fire the Fed Governor Lisa Cook for now. We do know at this point that the U.S. Justice Department has opened that criminal investigation into whether she did in fact commit mortgage fraud. That was sort of the legal case here, and whether there was cause for Trump's move to fire her. The judge now updated saying he cannot fire her for now. So that's the latest that we know so far. We'll move around in that story a little bit later on and talk a little bit more about what's going on in these markets here right now, because Hang Seng is basically on fire here today. You take a look at right now, we are seeing 8 shares as well as the Hang Seng up some 0.8%. It is one stock that seems to be really helping, and that's Alibaba, and really the cloud space in general, after we saw that outlook from Oracle overnight, and that really kind of put some more fuel into this whole AI trade, Dave.
Yeah, absolutely. In fact, it's 0.8% on both benchmarks. You take it even further, the Hang Seng Tech Index. Can we show that? I think we have a board of that. Hang Seng Tech. You have, before I get to this, because this actually goes into the Hang Seng Tech story, let's show that, please, if we can. You have the NASDAQ story, you have Kospi, where you have almost, if not still, on track to close at a record high. And, of course, thank you so much. And then you have, of course, Taiwan, where the economic data is suggestive of the AI play still front and center, where you have record monthly exports out of Taiwan. In Korea's case, of course, at the current level, if we close at this level, I believe we'll be closing at a new all-time high. So yes, the tech trade is very much intact. Now, what this means, and we'll go back to the chart which we just showed you, what this means now for this, a tale, I'm going to call this next segment a tale of two markets, right? In this case, A and H. That gap is now at a 6-year low. We're at 120 as the 8 shares continues to rally. We'll see what happens with this, but just to give you an indication of what the valuation gap looks like. The other thing I want to point out, too, is everything's rallying, right? Overnight, the S&P at a record. So what we've done is, if you're a fan of pair trades, what we've done is we put SPY on a ratio with KWEB. So it's, in other words, that's S&P versus Chinese tech. And, of course, that tends to move in tandem because those are both effectively risk assets. But on a pair basis, the ratio is actually now, because of the outperformance of Chinese tech, now below the lower Bollinger Band, which might indicate a trading signal that will likely reverse. The reason I say that is that we've had 5 instances of that this year, all in the first quarter. All were shortly followed by a very short-term bounce to the upside. Now, taking a step back, not to say that's a pivot back, Yvonne, to U.S. equity markets. That could happen. But what I'm saying is the momentum has certainly shifted in favor and the narrative and stories have shifted in favor of Chinese tech overall. I'm just saying this might have strayed a little bit too further short term.
Yeah, and it's certainly, it's interesting when you take a look at what we just heard from Chelsey Tam from Morningstar on Alibaba. She says, the stock still remains undervalued because people are still underpricing the whole sort of cloud outlook for Alibaba here right now after what we've heard from the earnings, and certainly them committing a billion renminbi in incentives to drive more traffic to AMAP. That was the news today. That just goes to show that they continue to kind of be investing in this whole commerce war too. So is that going to stoke some concern for the market? Not today, at least. Let's take a look at how our team is looking at this. Our Asia equities reporter Winnie Xu is with us right now. I mean, this continues to be a very strong sort of equity rally. What's the team watching out for today?
Yeah, actually, we just saw the numbers coming out. CPI a bit on the downside, but you looked at the market, and it's actually, CSI 300 up a little and was a very strong Hong Kong stocks as well. So that means that the rally right now is really not looking too much on the fundamental side of things. And it's also showing that even while this is kind of still in the deflationary environment, there's still these different catalysts pushing the rally to go further. And at this point, actually, yesterday we had a chat with Bank of America. They're seeing a little bit of an overheating in the Chinese stocks rally, whether you look at technicals from the velocity part of things or margin trading. So we might see a little bit of correction as we look ahead of the key events. Yes, overall, a very happy environment when it comes to global macro because of the expectation of the Fed to cut rates. But that, to some extent, has started to be priced in. So it's going to be very critical to see what's going to happen after the rate cut actually comes in, and as we prepare ahead of this fourth plenary to come in October.
The short term certainly does show some overheating signs. The longer, slow burn part of the story, though, and I think there's also a fantastic story that you guys put out, is really on what insurers are doing to the market and what that means for this sort of more sustainable bull run part of the narrative.
Yeah, exactly. That is one key driver of this structural story, why this rally has more to stay. And that is also being driven by kind of the government coming in earlier in the year to recommend or to advise these longer term money to come into the equities. And we saw actually that this is already happening with these insurers holding of equities reaching the highest since 2022, and now holding about 8.6% of equities. So that stable money is likely to provide support, not just for the onshore market, also through the southbound, so for the H shares. And we actually saw H shares doing quite well recently compared to onshore market. And southbound, I believe yesterday I checked, was seeing a constant inflow for the past 8 sessions.
Yep.
So you really see that support, whether it's from the longer term money or that recent excitement around the AI front.
All right, Winnie, thank you. Winnie Xu there, our Bloomberg Asia equities reporter. There's a lot to talk about here as well. Just the breaking news that we just brought you as well. With a judge, they're now saying that President Trump cannot fire Fed Governor Lisa Cook for now. Let's bring in Balazs Pence, our senior, a news desk editor, on what this means. I believe this is a temporary block. Right now, what do we know so far?
Yeah, that's right. It looks like this is the temporary injunction that Lisa Cook and her legal team have sought to let her continue to stay on the Fed and continue her job while this case plays out in court. But it is interesting that in the arguments, the judge said that the president likely did not have cause to fire Lisa Cook, which goes to the heart of the case. The team argued, the legal team argued that these mortgage fraud allegations, which she have denied, do not constitute enough cause for the president to remove her from the board. But the key takeaway is that for now, it seems like she will be part of that very, very crucial Fed rate decision next week.
Okay, just to pivot, and I'll ask you about what we know, get us up to speed on what happened in Doha overnight. But just before that, though, just seems to be some breaking news right now. This is out of Poland. So Poland says that Russia violated its airspace when striking Ukraine. This is separate, of course, and it now says its military operation, and this was a statement out 3 minutes ago, is ongoing. So this is something that's literally happening as I speak. It's looking at the situation very closely. It's ready to respond. And we understand it's also, Poland is currently looking into looking for to find the down drone-type objects. So far, that is what we know about this. I don't want to over-speculate in terms of what we don't know, but those are the news lines so far. Now, just to sort of pivot us back, because sort of one military operation is one story. The other thing was what we had overnight, Israel strikes in Doha, and it's really a rare pushback really from the White House when you look at President Trump and what he said. In fact, let's hear from President Trump and Israeli Prime Minister Benjamin Netanyahu on that specific story.
I'll be giving a full statement tomorrow, but I would tell you this. I was very unhappy about it, very unhappy about every aspect, and we got to get the hostages back. But I was very unhappy about the way that went down.
I convened the heads of Israel's security organizations and authorized a surgical precision strike on the terrorist chiefs of Hamas. Israel acted wholly independently, and we take full responsibility for this action. And this action can open the door to an end of the war.
Right, Balaz, lots going on, but let me start with Doha. What do we know?
Well, this was an operation that Israel carried out. They said they were targeting Hamas leaders who were in Doha. But the big question is, how does this affect the peace negotiations or ceasefire negotiations, which have seemed to stalled
quite get rid of that. That's fine. Yeah.
Quite a bit recently, and it does look like both sides are unhappy, both the U.S. and the Gulf allies. So this creates a very difficult situation for President Trump as he tries to pursue this ceasefire deal. And it puts Qatar, the UAE and other Gulf countries in a very difficult situation as well, as they have to balance those different pressures that they are facing. It looks like Israel did not notify anybody far ahead in advance of this operations. They called President Trump just before they started carrying it out. They took full responsibility for it. So we do see that rare piece of daylight between President Trump and Benjamin Netanyahu on this particular issue.
Back to Poland now. So they've been scrambling military jets. They shut a major airport. What do we know so far about what's happening there so far?
Well, I would start by saying that sort of airspace incursions have happened before in this war in Ukraine. We have seen that in many countries along the Ukrainian border, and NATO has had to scramble jets several times before. We do have to wait a little bit to see what exactly happened. Yeah. From what we heard so far, it looks like they might have been looking for a drone that might have strayed into Polish airspace. That has happened before as well. A few years ago, there was a case of a Russian drone going all the way to Croatia, sort of wayward aircraft. So that might be what's happening here. We're not sure. The fact that they did close Chopin Airport in Warsaw, and the fact that they are talking about an unplanned military operation does suggest that there is a level of concern. Just how serious that is, we don't know yet.
Yeah. Good and controlled way, of course, there. Balaz, thank you so much, and we won't speculate beyond that point. We'll get you the latest once we have more tangible information on what's going on there. Balaz Pence, our news desk editor. Yeah, lots going on. We will take a short break. We'll be back on the other side of it. Markets are still rallying. We're up 1% now on the Hang Seng, and there's plenty more ahead. Welcome back. So this year's Semicon Taiwan trade show is underway, and market attention has, as you would expect, turned to the mass production of advanced packaging technologies, capacity expansion in Taiwan, the U.S., the whole AI and tech conversation. In fact, let's bring in Annabelle Jewelers, who is in Taipei for us, our tech correspondent, and she's standing by with her next guest. Belle.
Thanks, Dave. Yeah, I'm joined this morning by DK Tsai. He is the chairman of PTI. So we want to start off with the role of PTI in the ecosystem and the role of PTI specifically in AI. And we've been speaking this morning about how demand for AI is real. It's continuing to evolve. It's maybe just in the early innings. That also means a lot of things for your business. So share how it works in the context.
I think AI is the biggest growth driver for the future. Currently, it integrates SoC and HBM. We foresee the future AI will require more and more chiplet integration. So customers will definitely need a bigger, larger reticle size of package. So AI is going to be a revolution for the industry. We think we started AI application product, and we think in the future our package become very big. So the wafer form for the AI is not able to support the requirement. So we focus on a panel size AI. So we think that panel size is going to be best solution for this requirement.
And so what does that allow then? I mean, we've been talking about going into this sort of post-Moore's Law era. How pivotal is it, that advanced packaging technology, going to be?
I think about this AI technology to make the AI, I think it's not just overnight you can accomplish that. So basically need some basic technology like copper beater bond, and now very popular about the high-next TSV connection HBM, and also many die attachment and then connection. So that involves so much technology to integrate as an AI chip. So I think we are very optimistic about the technology, which is a lot of challenges, but it means also a lot of opportunity for the company.
Let's talk about some of the challenges. I think this came up in your most recent report, but around availability of machines as well. I mean, it was something that was raised because advanced packaging is such a big focus, and you see TSMC, for instance, it has its own technology, CoWoS, chip on wafer on substrate. But how has it impacted your business as well? I
think actually our technology has an advantage. Now everybody knows CoWoS. And CoWoS actually is a chip on wafer and on substrate, which is a popular term right now. But CoWoS using the wafer is an interposer. But our panel size, we use the polyimide, we make an interposer by ourselves. So it's a different technology, but we are more challenging and more difficult. However, in the future, I think we have a better advantage because that wafer size, when the package becomes very big, is per wafer only can produce maybe a single digit of the packaging. But our panel size, we can do like 5 times of the wafer form. So I think that is the very challenging and also very interesting technology. And I think that will be the future trend to become panel size, not just CoWoS.
And that is already in production right now?
Yes.
And how do you keep up with demand then? I mean, I know you've got production sites in Taiwan, in China, in Japan. Do you have enough capacity right now, or are you looking to bring more online?
I think for conventional packaging, I think our capacity is enough to support the market demand. But in terms of this advanced technology, I think we are far away from the future requirement. Actually, the demand is very strong and very solid. So we anticipate we are going to have heavy capital expenditure in the coming years to support this requirement.
Big decisions then. So when it comes to deciding how you want to spend that money, is it money that you want to keep in Taiwan? Are you looking at facilities abroad? What's your plan?
Yeah, we are still looking for that because there are some labor cost concern, and also because this AI chip in the packaging require heavy capital expenditure. So it's not easy to make a decision. So we are still in the decision making process.
Yeah, certainly. It's multi-billion-dollar decisions essentially. Is the U.S. one of your considerations?
Yeah, U.S. because TSMC there and also the U.S. tariff. We did think of that, but we need the customer to support that. So our customer, most of the U.S. customer and also Japan customers. So we are thinking we are not looking for the low-cost, low-level cost country. We are thinking of the technology which can justify that kind of the cost.
One of the sort of issues that you hear about or questions you hear about, particularly in Taiwan, for companies that are looking to move to the US, and there is that push that comes not just from the US but maybe from the Taiwan side as well, is around labor. And there's that concern maybe that the right people aren't there, maybe the cultural differences. This week, for instance, or last week, we had the raids, for instance, on the Korean plant, the battery plant as well in the US. I mean, is that a challenge that you could foresee?
Yes, I think maybe. I think it will be a great challenge because I think U.S. and Japan, example, they did not invest a lot in this semiconductor, no matter in foundry or back end. But suddenly, so many people jump in, there will be a serious engineering, not a labor shortage, because most of our talent requirement is engineer. So that is the worry. However, I think the U.S. U.S. talent, most of them well educated, and it should be very easy to accept those, to learn those kind of technology. So from that point of view, I don't see a problem.
Okay. Well, it's Taiwan, of course, that really set itself apart with the Science Park approach. But DK, it's been a real pleasure speaking with you this morning. That was DK Tsai there, the PTI chairman, joining us from Semicon Taiwan, Dave.
Yeah, and of course we have more with Bell coming through here out of Semicon Taiwan. Later on, we'll be joined by the Infineon CEO. So stay tuned for that. He'll be sharing his global outlook for chips, supply chains, and maybe these tariffs, of course, and trade risks. And speaking of tariffs, there's an update, big update. We'll tell you what it is coming up on the other side of this break. This is Bloomberg. All right, welcome back. Alibaba is a stock in focus, 4-year highs. Technicals, you decide what's actionable based. We're just going to give you the observation there. 14-day RSI above 70, shares above the upper Bollinger Band. There's a lot of momentum across the stock. Also, the big story in the last few minutes is out of India. Nifty futures doing this on your screens, up 0.4%. And to tell us why is Stephen Engel.
Yeah, so we just heard from the Prime Minister. So Modi is saying that New Delhi and U.S. are working to conclude these trade talks as well. Right. What do we know so far?
Okay, so there's a lot of different angles to this story. First of all, we had Donald Trump earlier today saying he's looking forward to, having more talks with his good friend Narendra Modi. And again, the courting of Modi is going on right now. We saw it last week in Tianjin in the SCO, where he was clasping hands with Vladimir Putin and Xi Jinping. He skipped the parade last week, by the way, but he did obviously is playing that side. He's also warming up to the United States as. At the same time, Donald Trump is threatening more tariffs on India. I'll get to that in just a second. Basically, Modi is out with a statement following the statements from Donald Trump saying India and the U.S. are close friends and natural partners. We are working to conclude discussions with the U.S. at the earliest point. He basically says India and the U.S. are close friends and natural partners. I am confident that our trade negotiations, this is verbatim, will pave the way to unlocking the limitless potential of the India-U.S. partnership. He goes on as well, but essentially he's trying to engender some goodwill. Obviously, there's 50% tariffs imposed on Indian goods to the United States by Donald Trump, 25% for reciprocal tariffs, 25% additional tariffs for India buying Russian oil.
Meanwhile, there's a proposal being sort of brought up from the
That's
president
the other side of the story.
On
the confusing bit.
That could actually add tariffs to India and China.
So, in a nutshell, Donald Trump called into negotiations that were going on between EU officials and U.S. officials. He essentially called in to say, I got a proposal, and that is, we will put additional tariffs on China and India to try and get Putin, as an indirect result, to come to the negotiating table, the peace table, to meet face-to-face with Zelensky and reach peace in Russia and Ukraine. Okay, he said he'll do that if the EU reciprocates and does the same level of tariffs. But again, that's a hard ask because, again, the European Union needs a unanimous decision from member nations to do these strict sanctions. At the same time, the European Union is right now trying to figure out, I think it's like the 19th round of sanctions against Russia. But they need all members on board. And countries like Hungary have not signed on to strict sanctions against Russia on the energy front. So, again, they're looking at possibly further restrictions on shadow oil tankers, banks, the financial sector, or this Trump suggestion, which would add tariffs to India. So that doesn't engender sympathy from the Indians.
Okay. Steve, thank you so much. Stephen Engel, our Chief North Asia correspondent there. Just very quickly, a glance at lithium stocks down substantially as the CATL mine is set actually for a surprise earlier restart. More supply coming to the market, share price southbound.
.29 a.m. in Tokyo. Japanese markets are going to that lunch break in just a moment. Keep in mind, we do have a 5-year bond auction that's happening there in the city just a few hours away. And certainly it'd be interesting, if you put it against this backdrop of this Bloomberg scoop that we had, where the BOJ seems to be still willing to hike rates despite the political uncertainty going on in that country here right now. It makes for a pretty interesting sort of bond auction here today on whether we're going to see some demand or not.
Yeah, there is nothing you can do, Yvonne, to pull me away from my screen when the bond auction comes out in about an hour from now. So, yeah, I mean, we can...
I'm trying to think.
We can talk about lunch after I see the bid to cover ratio in a moment. The reason that time is also important is that's also because about the same time that we get the 5 and the 50-year bond auction results out of China. So I'm all things fixed income today. Fixated, not on equity markets. All that said, I'm being forced to talk about it because this rally is taking place. There we go on your screens. On the back of this, we talked about this earlier on, right? CATL. We'll tell you more in a moment, but yeah, CATL, not really doing a lot, but the other lithium plays coming up on your screens are really feeling the pinch here on the back of information that the mine will come back and churn out more lithium earlier than previously thought. In fact, CATL, why don't we talk about that?
Yeah, so this was something that we brought to your audiences maybe a few months ago, I want to say, when they were going to be really
the license on the mine.
Yeah, there was certainly a lot of uncertainty around that. So let's bring in our metals and mining reporter Martin Ritchie about what's really going on at CATL. So it looks like they're ready to restart this mine, Martin, and tell us a bit more about the timing and really the timeline now.
As you said, Yvonne, it wasn't that long ago that we were talking about this mine stopping, and now we're talking about it restarting. Lithium producers across Asia are down today. The expectation is that this mine, which is one of the world's biggest, it's right in the center of China's lithium hub, in Jiangxi province. Expectations are it might start up again sooner than expected, and that's just going to add to supply pressures that have beleaguered lithium prices over the past few years now. We're still trying to understand exactly what the reasons for the faster than expected restart is. The understanding before was that the government was concerned about sort of overproducing this important material. The market was oversupplied. It may be simply that CATL, the big battery producer which owns the mine, simply needs more material as demand starts to ramp up towards the end of the year, typically for EVs. But it's a big another twist for the lithium market. Producers down, more than 10, 15, 20% this morning in some places.
And you got to wonder whether there's some further catch down, Martin, because where lithium prices still remain. Have we heard from the company about this?
We haven't heard from CATL, which owns the mine so far at all. It was supposed to, the mines, they were applying for a new permit We don't know if that has actually been granted. We understand through people familiar with the topic that they're trying to get it done quicker than the earlier time schedule. I guess waiting for the local government to approve that restart. But it appears they are getting ready for that restart. Interesting thing about this mine is it's so important that when we had all the discussion about the potential halt, there were people flying drones above the mine to see whether they could, detect any signs of activity sort of coming down. So I wonder if the people flying the drones will be there again, looking to see whether it's about to restart.
Yeah, would be interesting what they find, and if someone's looking back up at them, say, yeah, nothing to see here. Martin, thank you so much. Martin Ritchie in Shanghai, Middleton Mining, reported there. Let's get to some other corporate stories that we're tracking here. So we're talking about Jane Street. We'll start here. So this Indian appeals court, to be more specific, has directed the country's securities regulator to respond to allegations here that it withheld documents crucial to Jane Street's defense in a market manipulation case. Now, the regulator has been asked to reply within 3 weeks to Jane Street's claims. SEBI has accused the trading firm of market manipulation to book hefty profits. Now, Oracle surged to a record, and we're seeing that play out across the region today, after it gave an aggressive outlook for its cloud business driven by demand for AI infrastructure. Now, its forecast highlights how cloud providers are positioning to then capture the next wave of AI demand. Now, the company says it signed four multi-billion-dollar contracts, plural, last quarter, including one with OpenAI. Right, let's talk about Apple. The company introduced its latest lineup of iPhones, including the thinnest version ever, featuring enhanced cameras and longer battery life. Now, alongside the phones, Apple also introduced updated smartwatches and AirPods as it looks to drive demand ahead of this upcoming holiday season.
I think I need to go to an Apple store just to see just how thin this iPhone Air.
If you don't see it, that's how thin it is.
And is it going to be very hard to? It's going to be hard to hold, right? I don't know.
Yeah. I have small hands, so that's probably going to fit in my skinny jeans pocket.
You're getting a lot of images to our viewers here. Let's talk a little bit more about, there's a lot going on amongst the bankers these days, right? Yes. Bloomberg Scoop, we're learning that CICC has created new job titles for senior investment bankers as it tries to retain talent amid a boom in deal making in Hong Kong. How big is this boom? Well, take a look at just the rankings in the league table here right now. In terms of some of the top underwriters here in the city, look at number 3 and 4, right? CITIC Securities and CICC have basically made it to the top 5, just given this frenzy that we've seen and really surpassed the likes of UBS of late.
Yeah, this is really one of the favorite functions of many of our clients, of course, the league table. Yeah. Because this does underscore, of course, many endeavors out there. Okay, let's get a broader sense of, not just the sort of pickup in ECM and financing here, but really what that means for organizational behavior with our deal supporter, Pei Li, here with us to talk us through. Okay, so what's the story? What is CICC doing here?
So we are reporting that CICC is creating 2 layers of new job titles for its bankers and staff. It used to be analyst, associate, VP, and then goes on to executive directors and managing directors, right? So now they're creating this new direct level, sandwich between VPs and EDs, right? And then they're giving this senior managing director title to mostly the heads of the departments. So this is kind of interesting because, as we know, the common prosperity is still in place. The banks still, the Chinese banks are still very conservative when it comes to bonuses and payments, and especially how much money those guys are making. It's still a very sensitive topic, right? So this gives CICC a new way to recognize some of these bankers, as we also have reported 2 weeks ago that some of the Chinese peers are also giving pay raises, actually quite substantial, we're talking about 20-30% pay raises. Wow. Right, to some of the junior bankers like associates and analysts level. So this kind of can help CICC to retain talents. While everybody's really busy, especially if you look at CICC and CITIC Securities, they get, and Huatai, they get the biggest shares of all these A2H listings in Hong Kong, which remains the theme of the year, right, for ECM.
Yeah, and I mean, you guys have been reporting that their head of equity sales in Hong Kong was poached or left as well, right, among some other senior members as well. I mean, what are the bankers saying about this, first and foremost? What are you hearing so far?
I mean, I've been hearing quite mixed messages, right? Like some people are really cynical about it. It's like, oh, why do you need to give the heads of the departments a senior managing director, as if people don't know they are like senior? But I think for among some of the junior bankers, they're pretty much welcoming this. For example, the direct title, I think, it kind of helps them to have a way to have a little bit of pay raise. It's something that can help them beat inflation, as one of the people was telling me. So I think it's one way to retain talents and lift the morale. While everybody's getting super busy this year.
Yeah, it's also an excuse and reason to update your LinkedIn profile that you got promoted. Paley, thank you so much, our deals reporter there. Right, just ahead here on the China show, we'll get an outlook. We're talking chips now with the CEO of Infineon amid these tariffs and trade risks live. That's not coming through live. Next, this is the China show.
All right, we're talking about AI and the right, because that's really kind of fueling these markets today. It's the perfect time to be in Taipei for the Semicon Taiwan trade show, and that's where we find Annabelle Drew as our tech correspondent, and she's standing by with another high-profile guest. Belle.
Yeah, that's right, Yvonne. Yeah, really great guest joining me this morning. This is the Infineon CEO, Jochen Hanebeck. So thank you very much for joining us on Bloomberg Television. I want to start about where we are. I mean, we're in Taiwan, of course, and Taiwan plays a really major role for you, for your business, the ecosystem. But just share the significance of the island.
Yeah, it's clearly one of the hotspots of the semiconductor industry. And it used to be always for manufacturing. It's the base for the biggest foundries in the world, very important partners of ours. But now, with the emergence of the AI, it's really also the center for the AI ecosystem, and therefore really important, and looking forward those days here in Taiwan to meet up with lots of partners, customers, and also welcome them at our signature event of October Tech tomorrow.
Let's talk about as well, you mentioned, of course, AI, and it's very clear today that AI demand is real. It's really in the early innings, but also the evolution, because we're moving from a point now that focus on LLMs into more physical AI or embodied AI. What does that also mean for your business and the kinds of semiconductors you're producing as well?
Yeah, absolutely. So the generative AI, the big topic for us is how to power the AI data center. But you're right, the next incarnation sort of is physical AI. And here we are talking about very complex autonomous systems like cars or humanoid robots, which need to perceive, understand, and act in a very complex environment. And that's for us a big opportunity coming up, because it's about sensors. It's about, for sure, compute, but not only the main compute. It's also about a local compute. And if you think about humanoid robots, if you think about what our fingers and arm joints are able to do, that will be a real challenge to replicate that in a humanoid robot. And you need lots of semiconductors like gallium nitride, for example, to realize these small joints. So a big opportunity. I'm looking forward to learn more here from our partners about it.
You've signed a partnership with NVIDIA as well on humanoids in particular. We hear these estimates about millions of humanoid robots being here in a couple of decades. The industry worth billions of dollars. But what's the opportunity for your business, and could you quantify it, do you think?
Yeah, I think it's at the early innings, as you said, the humanoid robots story. And of course, there's a lot of enthusiasm around it. I think we have to also look at what already exists, because classical automation, certain types of robots are existing and are already today useful in manufacturing lines or wherever. And I think this industry still has to find out where exactly the humanoid robot is adding value. But any humanoid robot, we are talking about $1,000 to $2,000 worth of semiconductor content per robot, and then you multiply it with whatever number you see in any forecast, and therefore it's a very relevant story to come up.
Yeah, really huge cost component basically for any humanoid robot on the market. What about autos as well? You mentioned that, and then of course you're a big supplier into the automotive industry. We've seen a slowdown in parts. I mean, in Europe, for instance, we've been speaking about it. But on the flip side, you've got new technologies that are developing, like autonomous driving software, for instance. So what does the industry look like to you right now?
Yeah, I mean, on a global level, the number of the car produced globally is not changing that much, right? It's normally fluctuates between 90 or 85 million. So it shifts between the regions, but here Infineon is very well placed because we have a rather similar market share across all the regions in the world. And then what matters for us a lot more is what you mentioned is the growth of the bill of material. So the number of semiconductors in the car is growing with the e-mobility in terms of power and in the sense of automated autonomous driving. We are talking about more sensors, we're talking about more compute, we are talking about the software-defined vehicle, and that's clearly a big opportunity besides market shifts or a sort of course, a difficult situation caused by the tariffs. But medium term, I'm very optimistic that not only from a cyclical point of view, there will be a growth coming back in the auto industry, but mainly from a structural point of view.
What about the auto industry in China? I mean, this is a market as well where you are getting a large amount of revenue from China as a country, but also we see names like BYD, for instance, that are increasingly bringing their chip designs and chip manufacturing in-house. So how does that impact your business?
As a matter of fact, we have many of the Chinese OEMs are at the forefront of adapting new technologies. If you think about software-defined vehicles, the Chinese OEMs are in average, I would say, ahead of other regions, and therefore they are important for us to bring new technologies in the car. When it comes to certain OEMs that decide to do some of their semiconductor manufacturing themselves, that's for us okay, because at the end of the day, we offer about 100 product families in automotive. And they are focusing typically on the SoC for automated driving, or they focus on the high power inverter module. But that's then about maybe 5 to 10 product groups, and all of the household names in China. All of those OEMs we supply with our broad portfolio, ranging from power to microcontroller, which we have now strengthened with the acquisition of the Marvell Automotive Ethernet business, as well as sensors. So we are really a broad player, and if somebody decides for whatever reason to do this in-house, fine, we can accommodate.
There has been, though, and we've seen it, that big push for self-reliancy led by Beijing, and then we're seeing the rise of a lot of different semiconductor players in China as well, even if they are still behind, the largest names in the world. Do you feel that as a business, even if you do have a big product suite?
Of course, China is investing big time into semiconductors, and you see a lot of capacity that has been built up. Capacity alone doesn't mean products. You need to build up a portfolio. We have done so over 40 years of learning, of gaining experiences. So I absolutely take local competition serious, but from a bigger perspective. One thing that where Infineon shines, for example, is that we are not only a component supplier, but we understand the system, and we can sit down with the OEM or the tier ones and define the next generation of architecture and combine then certain things. And this sort of system innovation is typically where you can keep any component competitor at a distance.
Yeah, I guess so. Trying to stay one step ahead of
yes,
what is
absolutely.
A very fast innovation cycle.
Accelerate
in China.
Innovation is key these days.
Last question on China then. Do you see yourself losing market share there? Is that a concern for you?
Sorry?
Do you see yourself losing market share there?
I think our market share, as I mentioned already, is pretty stable. If you compare China and Europe, it's at the same level actually, also in Japan. So that was always our strategy, because we said many years ago we will never be able to predict which OEM, which region is going to be more successful, which car model. So we are really aiming to be a broad player in all markets.
All right, Jochen, thanks so much for your time this morning.
Sure.
I hope you enjoy the conference and your event tomorrow as well. But that was Jochen Hanebeck there, the Infineon CEO. David, back to you.
Sure. All right. Yeah, Belle, fantastic there. If you're one of our Bloomberg clients and you can rewatch that interview, it's TV Go on your terminal. TV Go, literally. Yeah, you can scroll back, scroll forwards. Well, up until the present, unless, of course, you've figured out a way to time travel. But yes, you can catch many of the conversations that you might have missed here in shows, and Belle has done some fantastic conversations and interviews there out of Semicon Taiwan, plus, of course, some of the highlights from the China show today. Plenty more ahead. This is Bloomberg. All right, Alibaba shares are still up, although we are quite noticeably coming off highs of today. We were up as much as 3-4% at one point, 146, I believe, thereabouts, 1.4%, 1.3 now as I speak. So, yeah, continue to track this as, I guess, in many ways, the narrative has certainly changed in terms of the bullish side, but short-term indicators do suggest that we might see a period of consolidation ahead.
Signs of overheating, at least for the stock today. Maybe that's why we're seeing a bit of a pullback. But take a look when it comes to data stocks. Bear with me here. There's going to be a
Tell me a story, Yvonne. Okay.
About reforms to the market-based allocation of production factors. I don't know what I just read, but that's why we're seeing some of these stocks going up here. Data Tech, for example, Sharetronic up 11%.
Yeah. Again, just simply underscores as well the sort of policy sensitivity, particularly to good news recently, right? And I think once we get more information on these things, the markets tend to be rallying on the back of this as well. Right. The macro picture, though, did get somewhat clearer today following the release of the inflation numbers, which came through, and the CPI print, which the NBS then came out and said it was a high base from last year, which really pushed this even down even further to negative 0.4%, among the many other things, of course. The more encouraging bit came through with PPI, which came in line with expectations, narrowing that contraction. And then the month-on-month basis was almost at neutral or zero, still negative 0.2% monthly. But yes, this is indicative of the anti-involution efforts.
Yeah, Bloomberg Economics just came out with their reaction piece and saying, is this a sign of hope that anti-involution is now working and starting to ease some of the deflationary pressures out there on the factory floor, whether it's upstream or midstream industries here right now? So that is, I guess, the positive spin and all that as well. You take a look at how the bond markets are doing. Not a whole lot. I mean, you are seeing the 30-year up a little bit there, a little bit of steepening there, but we do have that big bond auction, 5- and 50-year later on, too.
Yeah, it comes out, I believe, in about 40 or so minutes from now. Also, about the same time that we get, of course, the 5-year JGB auction following what's really been, and it's only Wednesday, right? So a lot of drama as it pertains to the political environment, but we're holding fast and standing steady as far as the JGB auction and the BOJ is concerned, following our reporting that they are still prepared, if indeed it is the case, to hike interest rates despite the politics. So that's it from us here on the China Show. We'll see you all 明天.